Good morning to the most incredible XRP army. I'm gonna waste no time, let's get right into the video. Let me tell you something that should absolutely blow your mind. If you ever plan on holding 1,000 XRP, if this is ever going to be a target of yours, you need to see this. Altcoin season is not a meme, and it's not a Twitter narrative. It's a mathematically repeatable phase of the business cycle. And if you don't understand that right now, you are going to be positioned on the wrong side of one of the largest liquidity expansions of the decade. What just happened, and what does this actually mean for all XRP holders? These next moments could change portfolios. So I need you, the amazing viewers, kick back, get comfortable, smash the like and subscribe button, so this video reaches other legends just like you. Now, let's get right into the video. What you're about to hear is why the market is setting up for a delayed but far more powerful altcoin cycle than anyone expected. Why 2026 matters more than 2025. And why the people calling crypto dead right now are about to look completely blindsided. Stay locked in, because this is not opinion. This is macro structure. And once you see it, you can't unsee it. Altcoins do not move randomly, and they are not driven by vibes, narratives, or influencers. They are driven by the business cycle, period. When earnings rise, when credit expands, when liquidity flows, capital moves further out the risk curve, and altcoins sit at the far end of that curve. This is not unique to crypto. Small caps, junk bonds, high yield credit, emerging markets, and speculative tech all behave the same way. When the economy is weak, capital hides. When the economy accelerates, capital takes risk. The reason alt season has felt delayed is not because crypto is broken, but because the business cycle has been suppressed for longer than people expected. Here's where most people are completely wrong. They think the 4-year crypto cycle is sacred and immutable. It's not. Cycles are not dictated by Bitcoin halving dates alone. They are dictated by liquidity, debt maturity, and credit creation. Raoul Pal took a massive amount of heat for saying the 4-year cycle has turned into a 5-year cycle, but his reasoning is rooted in hard math, not vibes. In 2021 and 2022, governments extended the maturity of debt. That one decision delayed the liquidity impulse by roughly a year, stretching the cycle and confusing everyone watching old charts. This is where the 5.4-year cycle matters. The weighted average maturity of US debt sits around that level. And when you map that curve against historical liquidity expansions, it points directly into 2026 as the true peak period. Not 2024, not early 2025, 2026. That's why this cycle has felt frustrating, choppy, and underwhelming for alts so far. Liquidity simply hasn't arrived yet at scale, but that changes when debt rolls, stimulus flows, and credit creation accelerates all at once. Now layer in politics, because this is the accelerator most people ignore. Governments do not tighten into elections, they stimulate. Fiscal stimulus, tax incentives, deregulation, and credit easing are all political tools, and they are being lined up aggressively. The removal of taxes on tips alone injects over $1 trillion into the banking system. Adjustments to bank leverage ratios unlock trillions more in lending capacity. This is not subtle. This is a deliberate attempt to juice the business cycle. And when that happens, risk assets explode higher. This is why Scott Bessent, Trump, and macro managers are all pointing to a banner year ahead. They're not guessing. They understand the machinery. When liquidity floods the system, it doesn't stop at bonds or blue chip stocks. It cascades. Bitcoin benefits first. Ethereum follows. Then capital hunts for higher beta, and that is where altcoins enter their explosive phase. This is exactly how every risk cycle has worked across every asset class for decades. Now look at ISM, because this is the signal most crypto traders don't even track. The ISM index moving above 50 marks expansion. Historically, when ISM turns upward after a prolonged contraction, Bitcoin and Ethereum enter super cycle type moves, not small rallies. Structural expansions. The correlation between Bitcoin's trend and ISM is shockingly tight. This tells you crypto is still behaving as a macro asset sensitive to liquidity and economic acceleration, not just a hedge or a toy market. The reason people feel bearish right now is because ISM has been suppressed for an unusually long time, over 3 years below 50. That's rare, but rare conditions create rare opportunities. When ISM turns, it doesn't just drift upward, it snaps. And when that snap happens alongside easing monetary conditions and fiscal stimulus, the impact on speculative assets is violent in the upside direction. This is where altcoin season gets misunderstood. It doesn't start when people feel confident. It starts when liquidity quietly turns and positioning is still defensive. By the time Twitter agrees alt season is here, most of the move is already done. The biggest gains happen when disbelief is highest. That's exactly the environment we're in now. People are calling for bear markets, cycle tops, and crypto death while the macro inputs are lining up for expansion. The idea that there are too many tokens now completely misses the point. Alt season is not about every token pumping. It's about capital rotating aggressively into higher beta assets once liquidity allows it. The market will concentrate, not dilute. Strong narratives, real liquidity, and survivorship matter. The winners will run hard. The losers will continue to bleed. That's normal. That's how risk cycles work. Raoul Pal isn't saying alt season happens tomorrow. He's saying the peak phase of this cycle is pushed into 2026 because liquidity is pushed into 2026. That distinction is everything. If you expect fireworks too early, you get frustrated and exit. If you understand timing, you position, wait, and let the cycle do the work. This is how macro investors survive and thrive while retail churns itself out. Tom Lee independently reinforcing the same ISM-driven thesis should not be ignored. When multiple macro thinkers converge on the same conclusion from different angles, it's a signal, not noise. The end of QT, even holding balance sheets flat, is functionally liquidity positive. Banks expand credit. Risk assets respond. Crypto historically responds more violently than almost any other asset class because of its reflexivity. Bitcoin will likely lead, but altcoins outperform in the expansion phase because they represent leverage on liquidity. This is why 2026 is so important. It's when debt rollover, fiscal stimulus, easier financial conditions, and ISM expansion converge. That convergence is what ignites the true altcoin cycle, not a halving date or a chart pattern. This also explains why this cycle feels emotionally exhausting. The easy money phase hasn't arrived yet, but the positioning phase is happening now. Most people fail here. They either overtrade chop or capitulate before expansion. The market transfers wealth from impatience to patience every single cycle. Nothing about that has changed. The final piece is psychology. When the business cycle turns, narratives flip fast. The same people mocking alt season now will chase it later at much higher prices. That's not an insult, it's human behavior. Markets exploit that behavior relentlessly. If you understand where we are in the cycle, you stop reacting emotionally and start thinking probabilistically. Altcoin season is not canceled. It's delayed and amplified. The 4-year framework broke because liquidity structure changed. The 5-year framework explains everything you're seeing. Liquidity peaks into 2026. ISM expansion supports risk. Fiscal stimulus accelerates the move. That is the setup. You don't need to predict the exact day or hour. You need to understand the phase. If you grasp that, you stop panicking about short-term price action and start preparing for the expansion phase that historically delivers the largest asymmetric returns. This is not financial advice. This is macro reality. The cycle hasn't ended. It hasn't even started properly yet.